Hey everyone, I'm Willson Cross, the host of Make It Click, CEO and co-founder of Borderless AI. Thanks for stopping by today. Today we have two epic guests, two on one show. Jack Newton, the co-founder and CEO of Clio, and Dennis Pilarinos, the co-founder and CEO of Unblocked. I'm in Vancouver shooting with both of them. I can't wait to get this started. Thanks for tuning in.
How long have we known each other for?
It's got to be close to 15 years.
Yeah. So we're pretty good friends, and so it's
15.
And so we have a bunch of crazy shared life experiences and stuff. But we'll try to keep the inside jokes or just
so it's moderately intelligible to somebody outside of our sphere.
Yeah. So that's why I was if you want to have me, this guy's far more interesting than I am. So I'm pretty sure I can wrangle him to come in.
I kind of been doing this in the vein of instead of doing a coffee meeting, all these people I want to meet, and I've been a big fan of yours. Probably never even met me, know who I am, but I've been a big fan of yours growing up in the Canadian tech ecosystem.
Great. Yeah.
So really, really pumped that you guys are on the show. Thank you. I kind of just try and start just by a little bit of just introductions and just hearing your story. There's a bit of a Canadian theme to it, but really the big theme, the name of the show is Make It Click. And I try and do this with founders that are much further along than I am to actually learn. It's a bit of a selfish thing, but to learn and then we go from there. But I would love maybe Jack, Dennis, if you guys can just start either or.
It'd be fun. It's I've heard yours so many times. I kind of want to give yours.
Repeat my story.
Yeah, exactly. Yeah. But just in case we blunder, why don't you go with your background first?
Sure. So my background is in computer science. Got my bachelor's, then in my master's degree in comp sci, specializing in machine learning. And actually, learning about neural networks, and my thesis was on the foundation of what a lot of the LLMs and the crazy renaissance we're seeing in AI is today. My first job out of school after finishing my master's was at a startup company, a spin-off company in the University of Alberta called Genomics, and we were building life sciences software. And I was there for about 5 years, and it was at Genomics that I would say caught the startup bug. Yeah. I remember just really loving the idea of building a solution to a problem and really falling in love with a problem. It's there that I got exposed to the fundraising process. Yeah. It was there that I made my first trip down to the Valley and kind of saw how companies got built in Silicon Valley. And it was around that time I read Hackers and Painters by Paul Graham as well, which was a really formative, influential book for me where, I grew up in Edmonton and, nobody in my graduating class started a company. It was really, the dream was go work for a Microsoft or an Amazon or one of those companies. And it was around that time I thought, it'd be really cool to start my own company. And with my childhood best friend, Ryan Govro, started Clio in 2008. That was when the cloud was emerging, and we really saw the cloud as a transformative technology and a big opportunity. And that's when we, I describe us as two hammers looking for a nail. We had conviction around the cloud being something that would disrupt every industry. I think in the same way people think about AI doing that today. And we honed in on legal as the industry we wanted to disrupt and wanted to really transform through technology. And that's what we've been at for over 18 years now.
Wow. And you guys are at different places on the internet, quote a different number.
We're actually over 500 million of ARR today, USD. Most recently valued at $5 billion US in our latest financing round.
And that was a $900 million USD round.
That was our Series F, which was completed in 2024. In 2025, we did our Series G, which was a $500 million round with a $350 million debt facility that we leveraged for completing our acquisition of VLEX, which was a $1 billion acquisition that really transformed our trajectory into being an AI-first company.
Yeah. And you're just going to go through the alphabet now?
We'll see. We have ambitions to IPO at some point. The public markets are interesting place to be right now. Sure. We're not in any huge rush to get out there. But the private markets have been a really effective tool for us to both raise capital that we need to fuel our growth and to drive our M&A strategy, but also to return capital to our shareholders and to return returns to our employees through our equity program as well. So I think, it's very interesting in the 15 plus years I've been building Clio, you can achieve a lot of what you used to look to the public markets to do in the private market, while retaining all the control and optionality that the private markets afford you. Being a private company, I think is a huge advantage to us right now because we can transform ourselves. We can execute with extreme velocity. We can make bold moves like this VLEX acquisition is the kind of acquisition that would have been very hard to navigate in a public market environment, especially the kind of public market we're in right now. Whereas we saw a very clear thesis and a very clear opportunity there, and we're able to execute on that opportunity in a matter of weeks to get the deal signed up and close the deal in a matter of months.
Yeah. Wow. And lots to dig in there for sure.
Yeah, lots to explore.
But Dennis is here too.
Yeah.
So we'd love to kind of hear, and because your story is a bit more, it was your first startup got acquired by Apple.
Actually, not. It's actually funny. Jack and I have kind of a similar origin story. I went to school. I did a degrry in computer science as well, but I did it on the West Coast, which is obviously better.
I belatedly realized this.
You come around.
The weather's better.
Yeah. So I went to SFU. Actually had a small startup when I was in school.
Okay.
And so it was to, I guess, date me. You would remember this Palm Pilots. If you remember the Palm Pilots, right, from back in the day, had partnered with a company called Symbol Technologies to build a device that had a barcode scanner built into their. Cool. In a similar way that you kind of recognize, these are interesting. Obviously in that capacity, a micro technology shift. What are the applications or things that you can unlock with these technological waves? So at the time, we built a sales automation software, kind of complete back end where sales reps could go in, scan barcodes, dial in with a modem, and do order fulfillment while I was in university.
And that was your business.
Yeah, I partnered with a couple other folks and started that company. And so in the process of doing that and finishing my degree, I had an opportunity to do an internship at Microsoft, one of the places that, you aspire to, certainly. Certainly, I think, typically in Canada at that time, going to Microsoft or an Amazon or what have you is kind of a big deal.
I was making it.
Yeah. So decided to go do an internship, got a full-time offer, and then worked at Microsoft for 9 years, 7 of which were in Redmond in the States, and then 2 of which were actually building the development center here for Vancouver. I've built dev tools my entire career. So Microsoft was the first place where I started on client-side APIs for something called the .NET Framework 3.0, and then thought there would be a shift to the cloud. And so I was part of the team that in the very earliest days, kind of on the ground floor, decided to take those APIs and make them available to developers in the cloud. We started with a direct internet connection in my office. Every time I see an Ethernet port in a wall, I always think about this kind of crazy origin of getting an HP compact machine, sticking an Ethernet cable in, negotiating with Microsoft IT to get a static IP address, all this kind of startup craziness that you would do just in the context of a big company. What do you need to be scrappy and see if you've built something that people want? 2 years later, being on stage announcing the Azure platform to the world, which was super cool. And so moved back to Vancouver for a couple of years to help facilitate Microsoft's growth here in the ecosystem. From there, went to Amazon, was Amazon employee number 1 here in Vancouver. I think there's 3,500, 4,000 folks here now. So
over 4,000, I heard. Here for Amazon Vancouver.
Yeah. And so a bunch of crazy stories, just again, very similarly small, incubatory, let's see what we can kind of get done. I had, I spent 2.5 years there, had tried to build an iOS app just on the side and recognized that it was quite painful to accommodate a very simple developer workflow. Started a company called Buddy Build, which accommodated that. And so basically like had a small startup at Microsoft, had a small startup at Amazon, decided to do it kind of quote unquote in the real world. And that went from inception to acquisition in 3 years. So Apple bought that company. I worked for Apple for about a year and a half, and then took some time off and started Unblocked. So it's been developer tools and small companies that have, fairly substantive impact to that kind of customer base for my entire career.
And congrats on the journey. What was the reason why you wanted to do another one? Because obviously 18 years doing the same one. And I've heard you speak before, and it's really just parts of the journey. It's not like the journey's ever over. But yours, was acquired. Yeah. You were there at Apple for a year, and you wanted to do another one. Yeah. And it's I'm a founder. I run a software company, and it's tough stuff. It's very tough. Failure rates are very high. Did you what? Yeah, I guess why did you want to start another?
Couple of things. One, the same group that I kind of worked with at Amazon worked together at Buddy Build, worked together at Apple, and I desperately miss those people. So we literally got the band back together. Yeah. It's more or less the same group of people that have been working together for a long period of time. So that was definitely one. I am a builder. I love to build software. Kind of retiring and spending my rest of my life, I don't know, exploring my hobbies is not something that I think I could probably do at this point in my life.
You both are my age, 33.
Yeah, plus or minus. Yeah. So that's one of it. And the other, honestly, in a bunch of conversations, we've been friends for a very long time.
How'd you guys meet?
I was relentlessly trying to recruit Dennis through that career arc he just articulated for you. Okay.
I didn't want to disappoint him, so I never went over.
And at some point,
it's better not to blow up the friendship.
Yeah, at some point, I think I gave up on recruiting Dennis, and we just became friends. I think it's more or less we went out to enough coffees and lunches over that time that I gave up on trying to make Dennis, our CTO at Clio, and good friend instead, which is probably the right trait to make.
Yeah, appreciate that. And then things that you kind of think about it, when I take a look at Jack's career and be like, to have that level of impact and to stick with something for over that period of time, only when you've done that, even for a short period of time, do you appreciate how soul crushing an experience that could be, and be to see someone who's a very good friend kind of go through that journey is inspirational. It's I have energy to do this again. Yeah. I'd love to see if I can do it, but it's, I think part of it also, those are kind of the top three reasons. The other reason is in retrospect now, because I'm an idiot. I should not have done
Maybe
this.
not.
No, just kidding. It's still a great experience.
Totally. And when you guys have started, I guess when you started Clio, when you started Unblocked, and by the way, thank you for hosting. We're in the Unblocked HQ today. Yeah. This is your one office is here?
Yeah, we have one office here. Physically, where we're sitting right now is where I spend most of my time, most of the day. So, yeah.
And do you live in Yaletown?
I live very close, yeah.
Okay, nice. That's a good setup.
Yeah.
When you guys have started your respective companies, are you in the vein of hey, I'm going to run this for my entire life? Because, 15 plus years, very long run. You exited after 3 years. What's going into it? Is it just one step at a time? Because
when I started Clio, I had very humble ambitions for it, and certainly had no clue that I would still be at this 18 years later, or that Clio would become a 500 million ARR company worth $5+ billion. Ryan and I started Clio really thinking of it as a lifestyle company. We thought if we got a few hundred lawyers on this platform, we could build a nice little company that maybe employs a handful of people. And that was our ambition initially, was very humble. And again, I think, the pejorative way to describe what we were trying to build was a lifestyle business. Yeah. And we didn't see anything wrong with that. At the time, we really subscribed to this idea of bootstrapping the business. We didn't want to raise money. We didn't want to give up control. And it was really an early investor in Clio, a guy named Christoph Jans, that helped us realize, this was very early days of SaaS when we were getting to this. The whole category of vertical SaaS didn't even exist. The phrase SaaS barely even existed. We were talking about web apps
Infrastructure as a service. Platform.
Infrastructure as a service.
Platform as a service.
Platform as a service. Even the cloud was kind of a nascent term at that point. And this early investor, Christoph, he had recently exited his company, had just started angel investing. And his first company that he invested in was a company called Zendesk when it was 4 guys in a cafe in Copenhagen.
Happy customer.
Chain smoking. Yeah, we were early Zendesk customers as well. And Christoph just cold emailed us and managed to get a hold of us. And again, we were initially thinking we wouldn't raise money, but
didn't you ignore his email? Or
we ignored his emails, which is the best thing you can do to increase investor interest.
True.
So
yeah, as an entrepreneur, nothing being like, I'm too busy to talk to you.
And I wish I could say we actually deliberately ignored his email. It actually went to spam.
It didn't make it from Europe.
We inadvertently slow played Christoph. Well, that was exactly it. His email came from like a web.de email address.
Yeah.
It talked about investment and investment opportunity. And
don't read those.
There's bullet points. So I'm sure
hit every single spam filter.
Exactly.
A
Google's
hyperlink.
spam filter was just like 100% spam probability. So anyhow, we belatedly reached out to him, and he was genuine, and we really engaged with him. And what he helped us realize was a couple of things. One is in the SaaS world, almost paradoxically, the faster you're growing, the faster your burn rate is. And that's because all your customer acquisition costs are front loaded. It's going to take you a certain amount of time to repay those acquisition costs. So if you're trying to bootstrap, you're just really constraining your growth.
Mm-hmm.
The second thing he helped us realize is, look, you guys building this nice little lifestyle business in the corner of the internet might work for a year or 2 or even 5, but at some point, if it's even a remotely interesting space, a venture funded competitor is going to come to this space and probably eat your lunch, and your nice little lifestyle business will go to zero. And you guys are young. We were 30 at the time we started Clio. Why don't you guys swing for the fences and raise some VC? You can still grow responsibly. You don't need to kind of spend in an insane or irresponsible way, but take out this governor on your growth of not having enough cash, not having enough resources, and try to go after this market and own it in a big way. And legal at that point, legal is very sexy right now. There's a lot of money and a lot of investment going into legal right now. But in 2008, Clio and legal more broadly were like the least sexy spaces you can imagine. I would pitch a VC on legal and just see their eyes glaze over because they thought the TAM was too small. They thought the buyers were too conservative. Like there's a long list of reasons they thought legal was uninteresting, and raising money in it was extremely difficult. And we were really one of the first companies in legal ever in history to raise venture money and go after this market in a big way.
So, I remember like when we were raising money for Buddy Build, the number of VCs, there's no money in dev tools.
Yeah.
It's like all these industries in the past where you're just like, you can't make, like these things are not reasonable markets. What have you? And
it just becomes this consensus viewpoint where there's such a herd mentality in venture that if there's even a vocal enough minority that have that perspective, everybody starts believing it until somebody proves them wrong, and then they all chase after that new truth.
You could argue both of your respective spaces are like one of the hottest right now and have been for the last 3 years and will be for the next 3+ years. How much is that
well, I mean, literally, if you look at the spider chart or the polar chart, depending on how you describe it, but the polar chart that Anthropic released a few months ago now, showing how rapidly AI is going to transform certain parts of the economy. Dev tools and engineers is number 1, and legal is basically number 2. So I think we're both operating in the industries that are viewed as being the 2 most transformed and altered by AI, and as a result, there's just a huge amount of capital flowing into that.
So, whatever it is, 18 years ago. Could you have predicted when you started the company that you'd be here? No, zero chance, right?
Zero chance.
Yeah.
Zero chance. Yeah. I had no idea. But, I think what's been interesting is even though I described initially, we were kind of 2 hammers looking for a nail. Like we kind of had the solution and we were looking for the problem. What happened over those first couple of years for me was really falling in love with the problem, really realizing that legal is a deeply interesting space. There's a huge amount of friction in people accessing legal services.
There was no tech.
There was no tech. One of the stats I reference all the time is from the World Justice Project, but 77% of legal issues go unresolved, i.e., 77% of legal demand is not addressed by lawyers today. And when you think about the size of the legal market, the legal market is about $1 trillion market of spend worldwide.
Yeah.
And that is only addressing the 23% of demand that's actually serviced by lawyers today. So there's this multi-trillion-dollar opportunity to expand the reach of legal services. And I really think technology is at the heart of that expansion. I think we have enough lawyers to service that demand today. Just the way they service that demand is so inefficient. And the amount of friction the average consumer experiences trying to access legal services, just finding a good lawyer, finding out what it's going to cost them to get their legal issue resolved. I'm sure everybody in this room has had some exposure to how painful that journey is. Finding the right lawyer, trying to do price discovery, trying to get your actual work product
Knowing
delivered.
What's getting charged and what's not
Paying
getting charged.
Paying them.
Like,
Get out your,
Are you charging me for this? You charge me for the walk to the office.
Totally. So we think there's so much transformation that has to be done. And ultimately, I think about it as really boiling down to reducing friction. How do you reduce friction in that legal journey, both for the lawyer in everything they need to do to deliver a great legal outcome to their client, as well as to the consumer in terms of all of that friction that we just described.
Yeah. And with AI, you started your business pre-AI, the pre-AI wave.
Yes.
Pre-AI venture fueled wave. You may be kind of on the precipice of it. You may be a year with Unblocked, maybe a year prior. How much with Unblocked can get done without agents, and how much is it really agent native?
Well, I guess there's two parts to that. So our customers are, well, let's take a step all the way back, right? Historically, up until this point, developers have been the ones who needed a bunch of institutional knowledge, right? All this tribal knowledge that exists within the organization that they need to basically have access to so they can go and get their jobs done, right? If I'm a new engineer at Clio who doesn't have 18 years, I think of, Remy, right?
Yeah, context.
Who doesn't, basically a bunch of context. It's really, really hard for me to be, no matter how skilled I am as an engineer, understand how to be successful at a company that has a legacy code base and been around for a long time. That has been the case for as long as we've been in the industry effectively. Within the last 6, 8, 10, 12 months, maybe, increasingly what you're seeing, it's not people that are writing a majority of the code, it's their agents. And those agents suffer from the context problem even more so than people. And so what Unblocked is really helping is both people and their agents get that organizational knowledge very, very quickly, so they can be proficient in their task, right? So if they're implementing a new feature or fixing a bug, whatever it might be, if you are working in a company that's been around for a while, that has, dozens, hundreds, thousands of people and large code bases, Unblocked is transformative for those businesses.
And I joined the company as an engineer, and I just can get ramped up in a matter of weeks, not 6 months.
Two things, yeah. So you can ask Unblocked a whole bunch of questions, and instead of interrupting someone who's
that's insane.
So that helps a lot. And then when you're like, okay, I need to fire up Claude Code or Codex or Cursor, any of these tools that you're using, the way those agents work is like the new employee. They just go in and they start kind of guessing at solutions to get their problem done. What we do, I always think of this, remember in The Matrix where he's like, now I know Kung Fu. Right? That scene where he
plugged in.
He all of a sudden gets to that's what Unblocked does for their coding agents, right? In the same way that it might take humans years and years to accumulate that context, we can fast forward that insanely quickly for their agents so that those agents are writing the code that their experts would.
Interesting. So because there's this space where there's these knowledge bases, there's a company in the space that starts with a G. It's like a, for company knowledge bases, I can go on. I'm in the sales, I'm in the GTM space, and I can have it give me the context and all the previous deals I just started. And this one's quite vertical. How does that play? And legal's very vertical too. And there's players maybe trying to do it horizontally. And then there's this whole kind of dynamic of, hey, I'm going to build the AI lawyer, or I'm going to build AI for lawyers, or I'm going to build the AI engineer, or I'm going to build AI for engineers. Where do you guys, broad thematic point, but where do you guys kind of see that going, and how are you guys building against that theme?
For us, it's both, right? if we kind of look back in our history, right, it's very binary. Either you were on premise or cloud. You're either cloud and you didn't have mobile, or you did have mobile. They're very binary kind of states that you can be in as a business. When I take a look at the landscape right now, an organization can be in all different states in its AI adoption lifecycle right now. So some people have engineers who are asking AI questions so they can get their job done. Other people have fully orchestrated, cloud hosted, thousands of agents that are checking in code directly into production. Mm-hmm. Right. And so you can be at the same time across that whole spectrum. So we are both AI, for people, and AI for those agents to accomplish those things. But I don't know if you see it differently.
Legal's a bit different in that, at the end of the day, like lawyers have regulatory capture.
Yeah.
They are the only people that
these
can
guys
deliver.
Can do whatever they want.
That's right. So I mean, it's an interesting dynamic in the legal industry because, to me, the question kind of becomes, what is the narrowest slice of value that a lawyer should be engaged on to still be responsibly overseeing the work product that is being delivered to their client? And, although there may be an actual legal and fiduciary responsibility on the lawyer's part, I see it having a lot of symmetry in the role of the way the engineer is evolving as well, where again, I think everyone is deciding, like, where is the point in my job and my set of responsibilities where I have the highest leverage and where the highest and best use of my time goes, and how can I delegate out the rest of my responsibilities to a swarm of agents that I'm orchestrating and overseeing. And I really think that is where we as humankind are evolving, whether it's in the developer vertical or in the legal vertical, is a dramatic step up almost in the level of abstraction we're able to operate at. But we're not stepping away from doing the work entirely. Yeah. I think there is a lot of analogies that when I talk to lawyers that are worried about AI taking away their jobs and literally just being replaced by AI lawyers. Well, I actually see this transition as having a lot of analogies to the impact that spreadsheets had on the accounting industry. And when you go back and you kind of open up, and this predates my journey in the technology world, but reading up on it, when VisiCalc came out in the late 70s, back then there was people literally working in entire buildings running mechanical adding machines. And, a human being was really over the course of the day doing like the work of a cell in an Excel spreadsheet, and an entire floor of people was doing the work of a Excel workbook. Mm-hmm. And when VisiCalc came out, if you go back and read some of the people that were writing at the time of the kind of leverage it gave them, it's almost like you could be reading about people talking about Claude today.
Yeah, totally.
Where they're like, I'm able to get a week or a month worth of work done in a few hours or even a few minutes. And it's like having a cheat code. If you understand this technology, it's like you're operating in a different plane than everyone else.
Yeah. I was thinking about it's like, outside of software altogether, right? If you look at every time I drive by a construction site and I see people putting up buildings, right?
Yeah.
They're framing buildings with nail guns.
Yeah.
Not with hammers, not with something blunt object like a stone, right? Yeah. They've used the technology with their own skill to help accomplish their task in a far more efficient
and they
way.
can do bigger and better things as a result. Yeah. And so it's interesting when VisiCalc came out, there's a lot of gnashing of teeth in the accounting industry about the fact this was going to replace all sorts of accounting jobs and make them irrelevant. And what's very interesting is, of course, accountants didn't go away. There's more accountants today than there were in the late 1970s. And the accountants that are around make way more money than their counterparts did in the late 70s, even adjusted for inflation. And the reason for that is spreadsheets let them move up the value chain. They let them become more strategic, let them work on deeper and more complex problems for their clients. And those problems weren't adding numbers or subtracting numbers, right? And I think in the same way, we're going to realize, hey, the important work that engineers do is not writing lines of code. Mm-hmm. Mm-hmm. It is all the discernment and judgment in what the right lines of code to write are. Mm-hmm. Mm-hmm. And similarly for lawyers, it's not writing the 100,000th NDA
Yeah.
the world's ever seen,
Yeah, yeah.
or probably the millionth NDA the world's ever seen. The real work and the real value is actually deeply understanding your client's problems and creating the best solution for that problem. And if AI is automating 99% of that work, but your value is in the discernment and the understanding of your client, I think that's where
Like what you went to law school for.
exactly.
Yeah.
And that's I think at a macro level where knowledge work of all stripes is going with AI.
Yeah, totally. And what's like if I was you, and by the way, thank you. You get 500 million ARR, sold your company to Apple. I don't know what you're doing here sitting with me, but thank you. Appreciate it.
I think, you know what, like there is, you reached out kind of cold being like, hey, I'm this guy. There's a couple things. Like one, I deeply believe in like paying it forward, right? Like Jack,
both of us do.
Yeah. So both and I kind of have this thing, which is like we were all at some point in early stages in our career or early stages in an effort or whatever it is. And so like, I think, especially in the Canadian tech ecosystem, you should absolutely take the opportunity to like help strengthen the ecosystem, right? At the time, I think you had one episode out.
Thank you.
But the other thing is like, when I take a look at the production quality, the website, the things that you ask, you do really good work.
Thanks. Appreciate
right.
that.
And so
Thank
it's
you.
just like, I wouldn't loop him in if I thought, oh yeah, here's
Thank
like
you.
some joker who we should like just spend an afternoon talking to
Thank
or
you.
whatever. So, you do good work and I think it's the right thing to do. So
Thank you.
thanks for having us on.
No,
But yeah.
appreciate that. Thanks, man.
Yeah.
Thanks, Dennis. What's your take then? I guess on so you've been at it 18 plus years. You have, again, I'll never name them, but the competitor, or is it, my question, is it a competitor company in the legal AI space starts with an H, another one that starts with an L, another one out of Canada that starts with an S. And you're going, hey, I've been in this space for 18 years. These guys are raising these big blue chip rounds.
Mm-hmm.
Now, I would assume one of your big competitive advantages is you're very multifaceted with, you have like a multi-million-dollar payments business in Clio.
Mm-hmm.
Is that the wedge, or what's your take on those companies that are just kind of getting started, getting funded now, and they're kind of coming into your turf? Do you view it that way?
I don't necessarily think about competition all that much, to be honest. And all that might sound dismissive. It's really not meant to be. It's really a reflection of how I think about our opportunity in our business, which is looking at what our customers need and what the industry needs, and just really trying to think about like, how does Clio deliver on that opportunity? And what I saw with AI when ChatGPT first came out in late 2023, and I think anybody that understood technology realized what a profound shift was happening. I immediately got to thinking about how is this going to impact legal? And again, maybe right behind developers, lawyers are going to be impacted most, because when you think about what are LLMs strongest at, they're strongest at structured text inputs and producing structured text outputs. And they're strongest where there's large corpuses of information to train on. And again, devs have that in spades. They have, structured code bases and the petabytes, at repositories like GitHub. The inputs and outputs are literally structured language in the form of code. And then when you look at legal, again, it's text. If you think it's kind of a reductive way of thinking about a lawyer's job, but really at the end of the day, they take a bunch of text inputs in the form of contracts and documents,
Case law,
understand
Corpuses of case law. Yep.
Exactly. Large corpuses of case law, corpuses of their own clients' documents, understand their clients' goals, and then produce new, usually text-based outputs, whether that's a new contract or a purchase agreement for an asset sale, whatever the case might be.
Yeah.
So it was really clear legal was going to be dramatically transformed by AI. And again, we'd spent 18 years building this incredible platform that we described as the operating system for legal. And we saw the weakness of many of these AI point solutions that were starting to emerge was that they weren't actually integrated into the workflows lawyers used on a day-to-day basis. And furthermore, didn't leverage all the context we've just been talking about being kind of the unlock to AI. When you talk about giving your legal AI the right context, again, it's if you're talking about a specific matter, a specific project you're trying to deliver for a client, what are all the emails that relate to that matter? What are all the documents that relate to that matter? You need to ground that reasoning in the actual law. And that's one of the reasons that we had so much conviction around making this $1 billion acquisition of VLEX, is we saw we could bring this tremendous corpus of legal data under our umbrella and ultimately create, I think there's some really interesting parallels between our two businesses, even though they're servicing very different customer bases. Really, the question Dennis and I are asking ourselves every day is, how can I fuel this context engine for our customers with the richest data possible? And really, we'll go to any ends of the earth to provide that richer context, including a $1 billion acquisition. And where I think Clio is really uniquely differentiated in the landscape of legal technology companies is you have many companies servicing some narrow slice of this platform, but Clio is the only company in the world that's put together all the puzzle pieces across both the business of law in terms of that operating system and the practice of law in terms of this corpus of actual legal data. And nobody else can compete with that.
Totally.
And ultimately our thesis on what wins this space is whoever has the most context will win. And whoever ultimately does the best job of context engineering, building that context engine is going to win. And we just feel like we've got the best set of those puzzle pieces to go and execute against that opportunity.
I'm pumped. I'm a founder, so I'm very, you would never want me to work for you. But if I was looking for a job, that would pump me up.
Founders actually
make great employees.
Make great employees.
Yeah, they definitely do.
Yeah, that's true. So totally get that. So you have this corpus of data over here. You have the, call it RAG engineering over here. You put them together, and that's, what Clio is doing. I guess you could
better not be. That's a generation behind.
Yeah, I mean that's
fair.
Directionally correct.
The I guess flipping it a little different. Your customers are kind of the data, right? You go and sell into a large customer that has large context of a massive engineering organization, and Unblock is learning off of that context. Is that how you get your corpus, or how do you think about that?
No, I think actually not too dissimilar. I mean, like what Jack talked about is a handful of different data sources. Some of them are kind of institutionalized and agreed upon within like the profession. The way we think about it is like we go into an organization. Our largest company right now has 110,000 repositories and 30,000 engineers, right? They have many, many, many systems of records. What we do is basically take the source code, augment it with conversations that they've had in Slack, documents that they've written in Notion or Google Docs. Thank you. Tickets that they would have in their bug tracker. All these kind of systems of record that store all that tribal knowledge, and we put it all together, right? So what we provide is a context engine that's powered by the organization's information, but typically the truth that an engineer needs is scattered across all these different data sources, right? So like you can't just look at the source code and be like, oh, that's the right answer, right? You can't just look at a single Slack conversation. You need to be able to take all that, reconcile it, do conflict resolution, figure out at runtime who has access to what information so that you're not exposing information they shouldn't have. So there's a lot of complexity in that context engine that we've built. And then we provide services where both people can ask questions and, through a web experience or through Slack or whatever it might be. And then through their agents, through a variety of kind of APIs or AI programmatic endpoints.
And how much do you guys think goes, you read these headlines where I've talked to some founders where it's like, oh, my, OpenAI or Anthropic could launch something tomorrow, kills my startup because they go super vertical. Or you have these companies like Mercor that are like staffing up the like OpenAI to learn each vertical, and they're hiring people to do, finance verticals, accounting verticals.
Yeah.
What do you leave to the large language model providers, and what do you guys kind of do yourself? Do you even look at it like that?
I think it's kind of interesting, right? Because we're seeing those, I would argue like those frontier labs explore both research and application at the same time. My advice to founders, like anytime anyone says like, oh, someone could go and build, someone at Big Co could go and build this, having been at Big Co's in the past, is like, there is a shocking amount of like inertia that you have to overcome in order to get those companies to actually do that. you should be so fortunate that they're that means you've actually hit on something that is like very, very strategically important to them or what have you. That said, it's unclear to me at this point in time. You see something like Claude Design launch and Figma takes a huge hit in their stock price or what have you, right? How much of that is like based in reality versus kind of foretelling what might happen versus what the actual truth is? There's so much, I would say, speculatory behavior at this point that it's
and just FUD.
Lots
of fear, even more, and uncertainty and doubt in healthy measures in investors right now, where they just don't know how to discount and how to price Figma if Claude is. And we saw something very similar happen in legal a month or two ago. Anthropic released the Claude for Legal plugin. And it was just a co-work plugin. Like this was nothing groundbreaking. It wasn't them announcing we're here to conquer legal. For them, it was almost a tech demo of here's how you could apply co-work to a pretty pragmatic domain, like triaging NDAs for legal purposes.
Automating a file.
There was billions of dollars of market cap wiped out on like LexisNexis and Thomson Reuters, literally overnight. When Claude did this, just
someone vibe coded it
because somebody spent an afternoon on it at Anthropic. And again, I think, I do think the AI world's a very different place, and what these model companies can accomplish is pretty remarkable. Like I think Claude Design is a great example of what they can do when they put their mind to it. But when you look at the long tail of what needs to be done to really deeply solve an industry's problems, that's what most, not even the foundational model providers, but when you think about what they're doing, they're building horizontal solutions that then go get applied to verticals. And I think we'll see, one of my favorite sayings is quoting Mark Twain, but history doesn't repeat itself, but it does rhyme. And we saw all the same kind of speculation when we founded Clio, saying Salesforce is just going to eat your lunch. If it's not Salesforce, Thomson Reuters is going to eat your lunch, or LexisNexis is going to eat your lunch. And you just realize these big horizontal companies often don't have the time and patience and organizational focus to go and deeply solve problems for a vertical. Now, maybe that's different this time. Everything's clearly different, right? Like Anthropic has achieved over $40 billion of ARR in less than 4 years of existence. And things are moving at a pace that I've never seen before. No one's ever seen before. But I do think that some of those are close to natural laws of organizational behavior, where they will not be able to go after the kind of deep specialization and frankly, just the ground game that's required to execute on these vertical opportunities. Like, talk to Dennis about how many air miles he's racked up going to
I think
every developer conference, and how many I have, building relationships with bar associations. Like over 18 years we've built.
What's your air? How many? What's your
like hundreds of thousands of?
No, but what's your air plan? 1 point.
Oh, like 1.5 million or something.
Wow, I'm in the minors, man. I'm in the minor leagues.
So but these are city miles. Really building trust with all the organizations that need to support you, building the brand, building the trust, building the awareness,
and the depth.
Right? And the depth, like really understanding your customer. And I think that's the one thing that, again, even if the cost of producing code goes to zero, it's that building the understanding of your customers, but also building trust with your customers that is very hard to be done in a horizontal way.
Yeah, totally. Yeah. You guys both have obviously raised money over your company lifetime. You both have gone through M&A in the sense of you buying, was it 5+ companies?
6 now, I think.
Yeah. Okay. My research is there. So 6 companies.
There might be one unannounced. So
wow.
Don't dock any points on yourself.
We can't break it on the show. And you obviously sold your second startup, I guess you could say. What's maybe on the buying? What does that look like at different scales? How does that, because I heard you speak once, I went and saw you speak, and you mentioned you kind of built the relationship with Apple over like a year. And
yeah, close.
You had a similar situation with a company that you acquired. You knew the founder, you
Yeah.
built a rapport. How much is like the rapport relationship? How much is that versus like, hey, here's the spreadsheet, here are the economics, obviously makes sense, let's do it. Maybe those two.
I think it really depends on what kind of company you are,
Yeah.
right? Because there's companies like on the buy side, there's companies that will just look at the spreadsheet math and say, hey, this is financially accretive, let's do it. And that's very much not the way we do M&A at Clio. And I don't think it's the way that, Dennis has been involved in any process either. Like for Clio, we very much look at M&A as a roadmap accelerant. And, a roadmap accelerant in terms of actually acquiring technology that helps us accelerate our product roadmap. And then also acquiring people that we feel will, not just at a point in time, but on an ongoing basis, help us accelerate product roadmap. And when I said like founders make great employees, almost every one of the founders that we've acquired is still with Clio.
Oh, nice.
And every single one of them that did come through acquisition stayed with us for at least a few years post acquisition, and had a real impact on that ongoing product velocity. So I don't really look at the spreadsheet math beyond it needing to make some foundational level of sense in terms of not being having a negative impact on the company from a financial standpoint, but really it's about the people, and it's about understanding the people and the product, and that's where building the relationship. I think if you're a founder thinking about how do I get acquired, you want to be building those relationships so that people know you and know the technology you're building and know how you would be accretive to their organization if they were to acquire you. And if you don't give them that airtime, the likelihood that somebody just drops out of thin air and says, I want to buy your company. Yeah. It happens, I think, once in a blue moon, but most of it is, I've gotten to know you.
That's like kind of towards the end of the life cycle of a company. We talked about it even in fundraising. It's very strange to me that you would go into like a venture capitalist and be like, we've never met before, but you don't know me, I don't know you, but we should just you just give me millions and millions of dollars and we should get into this long-term working relationship. Yeah. That's kind of a weird thing to do, right? So it's like, if you're doing fundraising or if you're doing acquisitions on either end of it, it is still very much a relationship that underpins that transaction. And
on that, how many, you don't need to say the actual number, but just
17.
What's the kind of overlap or follow on from your first company to your second company
in terms of
investor relationships? Was it you said you got the band back together?
Yes, the people. So when I said the band back together, it's the same operational team. It's the same group of folks that started Unblocked, started Buddy Build, and we worked together through that time. The investors. If I had not given the investors the opportunity to fund the second company from the first one, they would have killed me. It's
good spot to be.
It's very flattering, very humbling. It was a crazy time. It's very, very. It's when you have, some reasonable track record here, there's no shortage of opportunity to raise money, and so having that pre-existing relationship and that shared working history, it de-risks it for the investors. It de-risks it for the entrepreneurs.
And how much has Clio raised total?
17.
It's over $2 billion US now. Yeah.
Wow, that's amazing.
That's insane.
That sounds like a huge number. We've burned about $100 million in our entire existence, though. So most of that $2 billion has gone back to shareholders, gone back to gone back to employees.
So you might become
acquisitions, presumably.
Acquisitions.
You might become the poster child for building liquidity without going public.
Absolutely. We've returned the vast majority of that capital to investors, and I think
it's kind of interesting. Going back to Christos' original thesis, right?
Yeah.
Just this money helps remove the governor.
That's right, and you remove the governor for growth. And I think one of the things that was actually a hard lesson for me in the journey was not really realizing what to do when you're 7 or 8 years into the journey, when you're starting to reach the fund lifetime of some of your original investors.
Yeah, because they need a return.
And this is where a lot of companies go through something unnatural, right? They'll get sold. They'll go through something that may not be the right thing for the founder or the right thing for the employees.
Yeah. And
what I realized, belatedly was like, look, you don't necessarily need to go public.
Yeah.
You don't. And again, the world has changed, right?
Sure.
When these fund lifetimes were established for VCs, the timeline to go from inception to public was 7 or 8 years. People forget Apple went public at like $20 million of revenue.
Yeah. Craziness.
When I founded Clio, a lot of SaaS companies were going public at $50 million or $100 million of ARR. And now, the threshold is, depending on who you talk to, between $500 million and $1 billion of ARR to go public. And you just think like there's such a vanishingly small number of companies that ever hit that threshold. It's kind of impractical to think about an IPO as a liquidity event for your investors or your employees. And so, again, this belated realization I had was how important thinking about periodic recapitalization of your investor base would be. And again, if you're a good company, there's going to be a long lineup of investors ready to get on your cap table with fresh capital, basically resetting that clock for you.
Totally.
And when we hit that first 7 or 8 year threshold, again, I thought, we need to sell the company. And
because you had a board and those.
I was getting pressure to create that liquidity. Yeah. And I knew our best days were ahead of us. I knew we were just getting started. I knew we'd be leaving a ton of money and a ton of opportunity on the table if we sold the company. And it turns out I was right. And I found, this is actually our Series D, that was this major recap, but TCV and JMI came in with a $250 million check. This was in 2019. And basically the message I gave to all of our existing investors at that time was, I will raise as much money as I need to create as much liquidity as I need to. So if you're feeling antsy at all, and again, we had some people that at that point had been on the cap table for over 10 years. So it's not unreasonable for them to be saying
that's not unreasonable.
They have LPs to deliver returns back to. Everyone's concerned about DPI and you need to realize that for your investors. So to friends and family, to angels, to institutional investors alike, I said, create as much liquidity as you want. You can sell 100% of your shareholdings or 0% or anything in between. But if you don't sell, I don't want to hear a peep about liquidity for at least 5 years.
And how many of them are still on the cap table from 2019? Like they must be happy if they are.
Like a couple of major institutionals got out entirely, just because they needed to create those DPI. So like Bessemer out entirely, a couple of others out entirely. TCV and JMI came on board, and the vast majority of everyone else carried forward.
So they're
and are happy they did, because we did that round at a $400 million valuation.
Oh wow!
And less than 2 years later, we did our Series E. At a $1.6 billion valuation. And then our Series F and Series G at $5 billion. So we've been on a tear. We've more than 10x the returns.
And what did some of those folks, what are the earliest investors, what did they invest at?
$1 million.
Wow.
Post money.
Like a safe?
On a safe. So we've created some pretty incredible returns for those investors over the years. But the important lesson here, the reason I'm spending some time on this, is so much of the founder universe focuses on raising your first $1 million, kind of doing that seed round, getting that Series A done. And that is obviously a really difficult part of the fundraising journey. But if you want to go the distance, if you want to build a big generational company, an important company, that's going to take usually at least a decade. And you need to think about, how do you create shareholder returns, and how do you basically trade in and trade out if you're a cap table. And also, by the way, give liquidity to your employees along that journey so that they can participate in that upside. And again, doing that in a structured way, really thinking about recaps that are sequenced out maybe every couple years on that journey, and having a really active and productive dialogue with your investors around like, hey, what is the timeline that you're going to need to see liquidity around and planning for that is I think just a really under discussed part of the startup journey.
Do you have any investors that invested so
Christoph's still on the cap table. Like
so
Christoph is diamond hands. Like this guy, he has sold down a little bit over the journey, as I think probably any rational investor would. But he was the first institutional money in, and still on the cap table today, and I still give him our board updates.
Is he still buying lunch? Does he buy lunch for you guys?
I haven't had lunch with Christoph in way too long, but I'm sure he would buy lunch. For lunch.
I had lunch with one of our investors recently, and we're like not burning much. So I was like, yeah, we're not burning anymore. And he's like, okay, you're buying lunch. I was like,
my rule is always whoever's raised the most money buys lunch. So if I'd be buying lunch.
Thank
if
you.
we went out for lunch.
I'll take you up for one of these years.
But yeah, Christoph still reads our shareholder updates, still reads our board updates, and I think is a proud early stage investor.
What's the conversation like when you're like, hey, so we're doing a secondary and you can get out now, but if you don't, I don't want to hear about it. Do you like go around, like do you have a book and you call all these guys and it's like,
well, that's literally just an email. It's just an email.
Like, let me know by Friday.
It's just, I mean, that's exactly it. It's just like, are you in or are you out? Here's the time frame, and here's what I would like to be agreed upon contract. If you don't sell, because again, it's just, if you're talking about anything other than running the company and what maximizes the outcome for the company, it's just a distraction, right? Yeah. It's a massive distraction. Yeah. And when you're fundraising, it's a distraction. If you're having board conversations around liquidity or selling, it's a distraction.
Coming to some Jokers podcast.
Yeah, and it's not a distraction though. I mean, you never know. I mean, just to your point though, like one of the reasons, just adding to what Dennis said earlier, I've hired amazing employees that are with us because they heard some random podcast that I was on.
Yeah.
Christoph found us because a friend of mine, a guy named Reg Cherami in Edmonton, ran this blog in 2007 called Web2.0central.com.
Yeah.
And asked me, hey, can I interview you and do an article about Clio on this blog?
Totally.
So random. And I was like, I think this blog has a readership of 10.
Yeah, totally.
But again, in those days, I was like, look, the worst that happens is I get a backlink,
exactly
that Google will
your domain authority goes
give
up
us a bit of domain authority for. And it turns out Christoph found out about Clio because he read this blog.
It's crazy. It's like, what's that? It's like revolving doors or sliding doors.
Totally, sliding doors. Yeah, exactly. And it's like, what if that didn't happen?
If you didn't do that, if you didn't check your spam folder, and all these number types of things.
Totally, just like the probability of being successful is so small, you realize how consequential these inconsequential seeming decisions are. So
the other thing is like you can never predict them at the time. Like when I think about all these kind of in retrospect, epiphanies kind of events,
it's insane.
There's zero chance you would have been like, oh, that was orchestrated or architected in such a way that I would get this outcome.
Insane.
But I think this idea that I'm not superstitious, but I do think there's some kind of karmic scoreboard out there that if you just operate in the world trying to add positivity to it, it pays off in ways you can't anticipate.
And I've never met you. This is the first time we've ever met. And I'd say you have that reputation. I talked to a few people today, I'm interviewing Jack on the podcast, and they're like, oh, Clio, great company. People love, Jack, great guy. And honestly, I think that's not like, I don't know if it's the norm, but a lot of people that run big companies, kind of sometimes.
It's not the norm.
I didn't want to go, but you can say like, it's not the norm. It's like a lot of
most people who have like that levels of success, what you tend to find is they have like egos that go with them.
It's insane. And like, you're so like, we just met, such a nice guy. Like
he's not usually this nice.
No, this is
he had a really good lunch. No, just
thank you.
But he is. Yeah. But
I hear you never want to, I hear you don't want to have a meeting with Dennis before lunch.
That's right. Yeah.
Because the blood sugar.
The blood sugar. That's actually,
so it's like when I was going back and forth.
100% that's true.
I was like, when I'm getting this coordinated, I'm like, anything just after lunch.
I did have a really good lunch.
And then I also
was a bit late because of that lunch. Sorry about that.
No. We have 500 million ARR. You can be late anytime.
You cannot be late. That's rude.
I knew I was going to.
Did you get a run in today? Did you
get a run? Despises tardiness.
Did you get a run in today?
Oh yeah. First thing this morning.
So so a little bit of a shift, and I know we all have busy schedules, but one thing you see these podcasts, startup entrepreneurial and they're all about business, all about all the stuff we've been talking about. Very few are on kind of like the healthy balance, the healthy lifestyle. And you know, you guys are married? Yeah, I'm married. I have no kids, but I'm assuming you guys might have kids.
Recently.
Yeah.
Okay. So yeah.
Not so recently.
Yeah, brand new.
Yeah.
Like what, less than 6 months? Or?
6 months.
Oh,
6.5
congrats.
months.
Yeah. And what's the like? And you run every day.
Yeah.
And it like you don't miss a day.
Don't miss a day.
You're like sick. You got the flu.
Still got to run.
That's the, yeah. If you think about all the life events that might happen to you over time, that's the least painful one to have to run through, I suspect.
Yeah.
Of things to run through.
Yeah. So my story around running is a interesting one. So I've run every single day without missing a day for about 27 years now.
Jeez.
And it started when I was 20. And it started after a year or so of like wanting to get into running and not being able to find a groove that actually worked for me. So I was trying to run, and I'm probably a bit OCD, like a lot of tech founders.
Sure. Yeah.
And I wanted to run like 5 days a week, but I would run, for maybe like 4 days in a week, run out of days to get the 5th day in. You're always negotiating with yourself, like, is today a break day or is tomorrow going to be my break day? And I'd kind of fall off the wagon when I hit one of those weeks where I couldn't run, the 5 days a week. And then I'd just stop running for like a month and then get back into it again. And when I was about 20, I didn't track the exact day because I didn't know how auspicious that one day would have been in retrospect. But I said, I'll just try to get a streak going and see. I'm not going to negotiate with myself around which day I do or don't run. I'm just going to run every day. And maybe that'll actually be easier than negotiating with myself every day. And so I got a week under my belt and then a month. And man, like the power of a streak is a real thing. Like then I got a year under my belt.
Wow.
I started having nightmares, like where I'd wake up, like,
you missed a day.
When did I run yesterday? Yeah, did I miss a day? And this was before Strava and everything. Did
I miss payroll? Did I miss my run?
Yeah, totally. And I'd have to like retrace my day. Like, oh no, I got my run in.
Traveling across an international date line.
Yeah, traveling across the date line, figuring out all these edge cases.
Like
and
my son was born. Should I run today?
Should I run today?
He's getting born. Do I run before or after?
To the hospital.
Totally.
Run to the hospital.
I've had all those. There's some cases I've been so close to missing my run. I've gotten the taxi to like let me out a couple of kilometers before the airport and run to the airport.
Wow.
And meet me with my suitcase. So the rules are, minimum 2K. So even if it's like,
okay, that's the rule. Okay.
Minimum
that's real.
2K, which is like, look, that's a 10 or 15 minute run. It's getting a sweat on. And even if it's with a fever or with COVID or I've run after minor surgery or whatever, like
baby's getting boring an hour.
I'm doing my run. I'm getting it in, and I'll be conscientious about not missing like major life events like that. But it's every day. And then what I've found is it's just really powerful not having a negotiation with myself about it's just like get up and do it. And then it's almost like meditative for me now, where it's like thinking about the day before, thinking about the day ahead, planning, reflecting. And again, it's a busy day. I've got 3 kids. I've got a wife. I've got...
What's your Twitter? It's like raising...
Oh yeah, raising 4 startups. Clio, cool. Ian, Patrick, and Isla.
Yeah, that's a good one.
And, my Twitter bio, I wrote that when they were
gotta raise money for all 4
startups. Totally. But so I had my first child around the same year. It was the same year I started Clio.
Oh, wow.
What's the IPO for the kids?
Yeah, exactly. Graduating, moving out of the house.
Yeah.
So Ian, my oldest, is 17 years old.
Okay.
Patrick is our middle guy. He's 16, and Isla is our daughter. She's 13.
Yeah.
And again, like life has just felt like it's on fast forward.
Yeah.
And started Clio and started a family around the same time. So maybe the only other thing I'd comment on, in addition to how therapeutic running has been, is having a family's actually been hugely energizing for me. And I think when I founded Clio, I kind of subscribed to some of this like hustle culture almost. Like you can't have a family, you can't have a girlfriend, you can't have any of these things that are a distraction from your company. But what I realized with the benefit of, my wife really pushed me on this.
I think that's the big unlock though. Like Tanya is insanely supportive.
Tanya is insanely supportive, but she also realizes what is right for me and
Yeah.
right for the family, in the sense that, I'd started Clio, and around the same time, I think Tanya started really thinking about like, it's time to start a family.
Yeah.
And my initial reaction was like, no, it's not the right time.
Yeah.
Like, let's just wait. I just started this company. Most companies fail. Like, this probably isn't the right time to have a family.
You're 30-ish.
I was around 30 at the time.
Totally.
And, Tanya, we had like an argument, frankly, about this for a few months. And I remember her saying to me at one point, if not now, when? Like,
Yeah,
when
yeah.
will it ever feel like the right time?
Totally.
And I realized she was right. It will never feel like the right time.
Yeah.
And so we started a family. And again, I think what's amazing is when you're playing with these kids, like,
Yeah.
they don't care about how much money you just raised.
Yeah.
They don't care what you shipped.
Yeah.
They just want to play with dad. And
Yeah.
you've now got the benefit of having a little guy of your own and experiencing that. I'd be
Yeah.
curious to hear you talk about it. But it's just like, it's not a distraction. In a lot of ways, it actually fuels your
I could
ambition.
see
and-
I think having built and sold a company before, it was super unhealthy. You kind of talked a little bit about the health aspects of like
Yeah.
building and running a business. My identity was so tied with Buddy Build that after it sold, I went through unquestionably a depressive phase, right?
Yeah.
Didn't have kids. My life literally revolved around that company.
Yeah.
And so getting up on a Saturday morning and not going to work or thinking about work or, in such a internalized way was a bit of a shock.
Yeah.
And so we had Enzo 7 months ago now.
Wow, congrats.
And so I'm late to the party, ostensibly. But I get to learn from all my friends, which
Yeah.
is kind of nice.
Good hack.
Yeah. It comes at a cost though, like old man back pain and stuff. So, but it is.
At least you don't run it every day.
I used to.
Oh,
So I used to run quite a bit.
okay.
Yeah. I used to run quite a bit, faster than Jack too, just for what it's.
we did go for quite a few runs together too.
Yeah. Yeah. So it is, I think only 6 months into it, what have you, but it is I think one of the things I learned is that it's actually good to have, even if you want to call them distractions, but if you have things that are outside of work,
Mhm.
what happens is that like when you take your mind, and I think we've all experienced this, when you take your mind off of the thing that you're obsessing over and focus on something else,
Mhm.
all the potential confusion or lack of clarity
Mhm.
seems to dissipate.
Mhm.
You look at it with fresh eyes, and a lot of these kind of problems that you were looking for solutions for are like available to you now.
Mhm.
So it's really remarkable to have some other focal point
Yeah.
to actually make you better at your job.
Totally. Yeah, that's a good insight. Yeah, I have a wife, and I would say it has been at the start very tough to kind of manage the time. And like you're there, you're out on a date, or you're out socially, and it's like, do you do email? Have you guys made a concerted effort over the years of like hacking the time management with family? Is that like a thing? Like, are you reachable all the time, but you're with family on Saturday? Is there a rule, or is there a routine?
I've seen, so it's pretty remarkable. In my career, I've had a chance to work with like some very senior folks. And like the ones who would, arguably accomplished the most were the most present in a meeting.
Mm-hmm.
Like I can only imagine the stuff that's going on in their emails, phones, so on and so forth.
Yeah.
But if they're talking to you, they are solely focused on you. It's like, it's insane to watch that. I think that's very, very unusual. Like, I think that certainly I wish I was more present in some of the conversations I have, even for like, if we're out and hanging out or whatever, we sometimes just say like, let's just put our phones down and chat about whatever it might be, because it's so easy to get distracted by it.
Mm-hmm.
But I think it is this, it is a superpower for people to just be like, it's either now or not now.
Mm-hmm.
So like they're very, very focused on the thing that's going on. And so as it applies to like other aspects of, one of our mutual friends, Jason, right? Jason, when he goes on vacation, does zero work. But like when he's at work or, not on vacation, he is all in on it, right? He's probably one of the best I've seen at like completely compartmentalizing that time off.
Yeah. I think when you're building something, when you're a founder, I think you're never not thinking about it, which is, I think almost a guilt you feel to an extent. Like you'll be watching your child, be born.
Yeah.
And some background
Totally.
Fred
I relate. Yeah.
is thinking about your business, right? And even is thinking about your absence from the business for the next week or whatever, and how that's going to impact things, and are things going to collapse? Because especially in those early days of building a startup, you are just always feeling like you're milliseconds away from imploding, and failing, and so for me,
You don't feel that anymore?
no, I do feel that.
Okay.
Like I feel like the biggest thing we need to fight at Clio is a sense of complacency that we've made it, and that existential threat has gone away. And I think you get reminded about that periodically. And I think, again, this AI era has reminded everyone that, no one
Here
is
today, gone
safe
tomorrow.
from
It's
disruption.
very, very easy.
And this is a technological story that is played. Again, history doesn't repeat itself, but it does rhyme. And this is a story we've seen many times before. So how do you protect against that?
Yeah.
And it's something that, again, I think, Andy Grove said it well, and, only the paranoid survive, and you need to be constantly worried about
Totally.
that next threat.
Yeah. Yeah.
But that being said, so I think one thing is, like, look, if you're a founder and you feel like you never stop thinking about it, I think that's a very normal state. I envy anyone that's able to actually compartmentalize that
Good to know.
and put it away. But that being said, like, putting the time into your family and your friends is so important. And, something I again have been very deliberate about is taking vacation with my family, going on camping trips. Every year I take one of my kids on a solo kayaking trip where we go up Indian Arm and camp at Granite Falls. And I think back about the memories that I really cherish. And it's those, just like a one-day trip, but a one-day trip where I'm disconnected from the internet. I'm not getting
it's not
emails.
that you're not thinking about Clio.
Yeah, and there's still some background thread.
Might be
thinking
healthy.
about that.
But that's my point, right? Which is when you get that distance,
Yes.
you're spending time, and that's your kind of I don't know, system one, but system two is still working on.
System 2 is always working on.
Yeah.
But put the time in. I try to be home for dinner. I travel a bunch. Again, those city miles, building the infrastructure are tough. But if I'm in town, I will move mountains to be home for dinner. As simple as that sounds, So, again, it's you can't run a marathon. You can't build something for 18 years if you're doing it in an unsustainable way. And I've tried to really strike that. Again, I don't really love the term work-life balance, but that work-life blend. How do you incorporate both in a way that sees you build strong relationships with your spouse and your kids, and because again, that's the stuff that really matters in the long term. That's the reason you're building the business in a lot of ways.
I was going to say that's kind of what, to me, kind of what keeps them going is it fuels the family piece,
right?
And they both kind of feed off each other.
That's right.
And you have
how does it mutually reinforce rather than being at competition with one another?
This has been awesome, guys. Yeah, really, really appreciate it. You guys taking the time. So
I appreciate it.
Yeah, thanks for having us.
Yeah, this is dope.
Awesome.
Yeah, we can wrap.
Awesome.
Thank you.
Yeah, all good.
Cool.